Well, the EPF rate for FY24 is out. It's at 8.15%. Now, this is slightly higher than what it was last year. Last year, or rather in FY23, the EPF rate was 8.1%. It's just a 0.05% increase. And let's try and break this down in the larger context. Now, prior to that, in FY22, the rate was 8.5%. So what led to that steep decline? Well, the steep decline was largely led by lower inflation. That's point number one. Lower interest rates. The repo rate was at 4% back then. The repo rate is the rate at which RBI lends money to banks. So it is typically the rate at which you and me receive loans from banks, or is adjusted for that, or it's comparable to that. But now those rates have started to move up. Inflation also has started to move up. Let me take the inflation example. Over the last 10 years, inflation in India has averaged 5.7%. Over the last 10 years, the EPF rates, interest rates on EPF, has averaged 8.6%. Currently, inflation is at 6.5%. When I'm looking at EPF rates currently, 8.15%. Sharply lower compared to the last 10-year average, and despite inflation being higher than the last 10-year average. Let's also compare it to the repo. Mind you, I explained the repo is basically the benchmark at which you and me borrow, right? Or it is a comparable at which you and me borrow. So as the repo adjusts itself, rates in the system get more and more expensive, and loans to people like you and me get more and more expensive. So that could be an appropriate benchmark as well, right? So let's take that. The repo rate is at 5.8%. That's the last 10-year average repo. Again, the last 10-year average EPF interest is 8.6%. The repo currently is at 6.5%, well above the long-term last 10-year average. But the EPF rate, far lower at 8.15%. Clearly makes a case for a higher EPF rate, right? Let me lastly shift it across to the India 10-year bond yield. That's the interest which you and me earn on our debt funds, right? Largely, it's a fixed deposit, or a comparable to a fixed deposit, right? The last 10 years India bond yield average has been 7.2%. Currently, the India 10-year bond yield is at 7.3%, which is higher. But the EPF rate is sharply lower, 8.6% versus 8.15%. Clearly making a case that the EPF rates ought to be higher, right? Given that inflation in the system is higher, that the repo rate is now much higher than the 10-year average. And lastly, the fact that even your 10-year bond yield is yielding much higher than the average. So technically speaking, it ought to be higher, but it's not. And that may be a cause for a bit of a disappointment for you and me.
If you like this video, then like, share and subscribe to ET Now.